Hey guys, today we are looking at the Chevron Corporation, ticker symbol CVX. I'm going to see if it's still a buy. Currently it is $107.98 a share, and at the bottom of the pandemic, this time last year, it was $65. And if we zoom out a little bit more, at the bottom of the pandemic, it was $52 a share. So some great buying opportunities there. If you were interested in the stock, I was buying oil stocks left, right, and center at those times and made a killing because of it. But is $107 a share still worth it? Well, if we look to the pre-pandemic price, you can see that before there in December, it was around about $125. And then even before the pandemic, it was $112. So it still has room to grow to get to that point. Definitely had a hit because of coronavirus, but can it get up to that price? So we're going to look at the fundamentals of the stock and then some technical analysis as well. So usually I would be going through all of my steps, but the market cap 208 billion, dividend 5.07, the ex-dividend date is the 17th of November, so buy the stock before then if you want it, and then we'll look at our steps quickly here. So the PE ratio less than the market in the sector, no, it has a high PE ratio of 57.21. Is the revenue increasing? No, that's a fail. 158 billion to 116 billion. So that does look like a massive fail. But if we just quickly look at the revenue here, you can see it is up from its previous year in 2020 of 94. So that is definitely increasing, which is a good sign. Then you want to have a look at the profit. Is that increasing? And it's gone from 14 billion to 3 billion. But once again, if we have a look at the profit here, you can see it was 16 billion, 2 billion in 2019, minus 5 in 2020. So positive. So in the short term, it's gone from negative to positive, which is a very good sign. All of the shares outstanding decreasing? Yes, they are. They're buying back their shares. So that is the sole pass, the only pass. And finally, is the free cash flow increasing 16 billion to just under 10. So only one of my steps has passed. But once again, if we look at the free cash flow on Chevron here, if I just click on the cash flow and scroll down the bottom, you can see that the free cash flow is 9 billion. Compare that to this is 2017. It was more than that, less than the two prior years, but it was only 1.6 billion in 2020. So the free cash flow has increased to over 8 billion. So yes, not as good as it was in 2 years ago, but definitely a stock on the rise, which is excellent to see. So let's have a look at my valuation. Once again, I use discounted free cash flow and a Buffett Graham intrinsic value. I've calculated the future free cash flows, being a bit conservative. I've said it's going to take a few years for it to get back to its 2018 and 2017 free cash flow. But based on discounted free cash flow, that gives a calculated stock price of $131.02 a share, which is meaning it's trading at a 21% discount. So that is very good in terms of discounted free cash flow. So give a like on the video for that. But a different story on the Buffett Graham intrinsic value. Because of its low earnings per share, it has a fair price at around $80 and a Graham price at 60. So the Buffett Graham intrinsic value does not say it's a buy, but discounted free cash flow still says that this stock is undervalued. So if we just go back to the stock and have a look at it, I mean, it would have been a buy here, it would have been a buy here, and it's been, it's had plenty of buying opportunities the entire time. When it pulled back to 90, that was a great opportunity, but discounted free cash flow still says it's very, very good. So we're just going to have a look at some of the technicals here because they do tell an interesting story. And let's just go to the last 6 months and turn on the 200-day. Sorry, let's go back to the year. We'll turn on the 200-day, which is a longer moving average. Sorry, let's go to a year. Let's go to a year. So we've got the 200-day, which is longer moving average. You can see this has been acting as resistance. It did briefly break through at this point, but it has broke through again. So on the 200-day, that's some bullish momentum. Next one I want to look at is the 100-day, and you can see that the 100-day is above the 200-day, which is a good sign, and it is broke above both of them again. So in terms of the moving average, is looking good. And finally, we have a 50-day moving average. Now, if we saw the 50-day moving average crossed at around about July, that would have been sell signal. Another sell signal here when it crossed below. But then this price has had a massive move up since September 17th, gone up probably about, 10% in those past few days. and sorry, a little bit more actually, about 12%, and this would have been a great buy signal as the price has pushed through all of the moving averages, the major moving averages. So you can see here, and if we look at other times this has happened, when the price has broke through, it's gone up and made some pretty good money before it's pulled back, and then you've seen this have been some resistance behind it. So expect this stock to probably rise a little bit more, and if there is a pullback, the moving averages have provided some resistance. So let's just clear these off right now. And let's have a look at another indicator I like, which is the MACD. And I like to look at this on the year and on the daily daily size. So you can see here we're on the daily, we've got the year, and you can see here that the MACD is on the green side, massively on the green side. The MACD line, single line, have crossed about the 23rd of September. So that would have been a buy signal there, and you would have made a ton of money on the way up, and it is going up and up and up. So the only times it's really had this sort of bullish momentum was back in November, where it went from $70 to $90. And then a similar one is, well, maybe a similar one here in January. So it could be a bit of a trap, although it has broke above that. And then the last time was in March, when it went from, when was the last cross? February to March. So once again, if you've been using MACD on this and you've seen the cross, you buy there, you sell there, you've bought here, and then you would have made money all the way up. You would have bought money here, you would have sold here, and there would have been a lot of money to be made on the MACD. So that's why it's one of my favorite indicators. Yes, you wouldn't have made as much money on these ones, but still, these has been a very good stock in terms of MACD. So keep an eye on that if you like the look of that. And the final one I like to look at is the RSI, and to see whether this is in overbought or oversold regions. And then you can look at history and see what it's been doing. So currently it is in the overbought range. But if we look at other times it was in the overbought range, you can see that it was overbought on November, and it still continued to rise a couple more months before it dropped down. In January, it hit the overbought range and then dropped off. And then another time when it crossed over was in February, where the price continued to rise. So if this starts to drop, then you could see something very similar to what happened in January. But if it goes above this line, you'll be able to see what happened in November and March. And then also, if you just look at the underbought regions, this stock has only been underbought the past couple of times. October broke below the line, excellent time to buy. Once again in October, very bottom of the underbought. Here in July would have been a good time to buy. You would have made some money on the way up. And then again in August, you would have bought there. So the technicals are looking pretty good. Definitely a lot of tools that can be used on Chevron. It's a pretty good stock in terms of that. It's followed the lines followed the indicators quite nicely, and despite the fact the fundamentals aren't great in terms of passes, you can see that the stock is definitely an improving state from where it was this time a year ago. But if you have been waiting, I mean, these are opportunities to buy here and here. That's when I was purchasing some Chevron, but it still has a little bit more to grow from what we're seeing in terms of that. So definitely very interesting. Right guys, thanks for watching. Please give a like on the video if you enjoyed it, and I'll catch you guys next time.